Hi, and welcome back. If you have been in the crypto market for any length of time, you know the feeling of waiting. You know the feeling of watching other assets, memecoins with no utility, ghost chains with no transactions, explode in value while your high-conviction play sits dormant. If you are a Hedera holder, you don't just know this feeling. You have lived it for years. Today, we are going to talk about HBAR. But we are not going to talk about it with the usual hype or the standard 3-minute price prediction. We are going to deconstruct the entire ecosystem as it stands right now in early 2026. We are seeing a strange paradox. On one hand, the price action is frustratingly calm, hovering in the 11 to 12 cent range. On the other hand, the fundamental reality of the network has shifted so dramatically in the last 6 months that it is almost unrecognizable from the Hedera of 2024. We have seen the launch of a spot ETF on the New York Stock Exchange. We have seen the integration of Hedera with Nvidia's Blackwell architecture for verified computing. We have seen the Bank of Ghana and major players like Repsol and Arrow Electronics join the Governance Council. So, the question we must answer today is simple. Is the market wrong, or are we? Is HBAR a sleeping giant about to wake up and reshape the financial world, or is it a technological marvel that is destined to be undervalued forever? Get comfortable. This is the ultimate deep dive into Hedera Hashgraph in 2026. Let's start with the elephant in the room, the ETF. Throughout 2025, the community's battle cry was ETF incoming, and in late 2025, that wish was granted. Canary Capital, followed by others, successfully listed a spot HBAR ETF. In theory, this should have been the catalyst. We all remember what happened to Bitcoin when BlackRock entered the chat. We remember the institutional floodgates opening. So, why are we still sitting at 12 cents? To understand this, we have to look beyond the headlines. The launch of the HBAR ETF coincided with a very specific, risk-off macroeconomic environment in late 2025. Institutional capital is conservative. They don't ape into assets the way retail does. They test the waters. But there is a detail about this ETF that 99% of the market has missed. This isn't just a paper derivative. In December 2025, we saw something historic. Archax, the UK-regulated digital asset exchange, didn't just list the ETF. They tokenized it on the Hedera network itself. Think about the meta layer of what just happened. You have an ETF tracking the price of HBAR, and the shares of that ETF are themselves tokens running on HBAR. In November 2025, Archax executed the first out-of-hours transaction of this tokenized ETF. While Wall Street was sleeping, while the New York Stock Exchange was closed, millions of dollars of this HBAR fund were moved and settled instantly on-chain. This is the proof of concept for the future of finance. It proves that Hedera isn't just the asset being traded, it is the infrastructure on which the trade is happening. The low volume we see in the traditional ETF right now is a distraction. The real volume is building on the tokenized side, where 24/7 liquidity is becoming a reality for institutional players. They are currently testing the pipes. And when those tests conclude, the flow of capital won't be a trickle, it will be a fire hose. This brings us to the strongest narrative Hedera has in 2026, real-world assets, or RWA. Everyone talks about tokenization. It's the buzzword of the cycle. But let's look at who is actually doing it. We aren't talking about tokenizing a rare pair of sneakers or a piece of digital art. We are talking about the plumbing of the global financial system. By mid-2025, the total value locked in real-world assets on Hedera crossed the $1 billion mark. But the number isn't as important as the names behind it. Archax has been the MVP here. They have successfully tokenized money market funds from HBAR, one of the largest asset managers in the UK. But it gets bigger. In July 2025, we saw the involvement of Lloyds Banking Group. They didn't just issue a press release, they used these tokenized assets as collateral for foreign exchange trades. Let me explain why this is a game changer. In the traditional world, if a bank wants to trade on a Friday night, they are often stuck because the collateral system is closed until Monday morning. By using Hedera, they can move tokenized money market funds, which are earning yield, instantly at any time of day to secure a trade. Why did they choose Hedera? Why not Ethereum? Why not Solana? Because banks don't care about decentralized vibes. They care about finality and fixed costs. They cannot build a business model on a network where a transaction might cost 50 cents today and $50 tomorrow. Hedera's fixed fee of a fraction of a cent, combined with ABFT security, the mathematical guarantee that a transaction will not be reversed, makes it the only logical choice for enterprise-grade finance. We are seeing the creation of a new financial layer where treasury bills, equities, and money market funds all live on the hash graph. And every single time one of these assets moves, HBAR is paid as fuel. This is the definition of intrinsic value. Now, let's pivot to the technology that dominates our lives in 2026, artificial intelligence. For a long time, crypto and AI were seen as parallel lines that never touched. One was about money, the other was about computing. But in late 2025, those lines crashed into each other, and Hedera was at the point of impact. We saw the confirmation of Hedera's integration with Nvidia, specifically regarding their Blackwell chip architecture. This is not a marketing partnership. This is a technical integration to solve the biggest problem AI faces today: trust. We are living in the age of deepfakes. We are living in an era where we don't know if a video is real, if a news article was written by a human, or if a financial audit was hallucinated by a large language model. Hedera is positioning itself as the trust layer of the internet. The concept is verifiable computing. When an Nvidia chip processes a dataset, it can create a cryptographic proof of that action, a digital fingerprint. That fingerprint is then stamped onto the Hedera consensus service. Why does this matter? Imagine a medical AI diagnosing a patient. You need to know, with absolute legal certainty, which data the AI used, and that the data wasn't tampered with. Hedera provides that immutable audit trail. If this standard gets adopted, and with Nvidia's market dominance it likely will, we are talking about billions of transactions per day. Not financial transactions, but trust transactions, validations, timestamps. Verifications. This is the Google scenario for Hedera. In the early 2000s, Google organized the world's information. In the late 2020s, Hedera is organizing the world's trust. The price of HBAR today does not reflect this potential. It reflects a misunderstanding of what HBAR actually is. It's not just a coin, it's the oil for the engine of truth. One of the biggest criticisms of Hedera has always been centralization. It's corporate-owned, they say. It's not real crypto. In 2025, that narrative began to crumble. We saw a massive shift in the governance roadmap with the introduction of block nodes. For years, only the governing council members, Google, IBM, Boeing, and the new additions like Bank of Ghana and Repsol, could run the nodes that write to the ledger. But in late 2025, the roadmap evolved. The network is opening up. Block nodes allow the community and other organizations to verify the state of the network independently. It is a step-by-step march toward permissionless participation, done safely, without risking the security of the network. But the most exciting governance development is actually a collaboration. It's called the Direct Alliance, the Decentralized Recovery Alliance. For a decade, the scariest thing about crypto was losing your keys. If you lost your seed phrase, your money was gone forever. It was a barrier that kept 90% of the population out of crypto. Hedera, along with Algorand, founded this alliance. But in 2025, we saw the heavy hitters join. Ripple and Cardano came on board. Think about that lineup: Hedera, Algorand, Ripple, Cardano, the Avengers of utility crypto. They are building a standard where you can recover your digital assets just like you reset a password, but without giving up control to a centralized bank. This protocol runs on Hedera. It is the user experience breakthrough that crypto has been waiting for. And the fact that Hedera is leading this, bringing competitors together for the greater good, shows the maturity of this project. They aren't playing tribal games. They are building industry standards. Now, let's get to the part everyone wants to hear: the price. As we speak, HBAR is trading around 0.11 to 0.12. It is painfully boring. But in technical analysis, boring is often good. Boring is accumulation. When we look at the weekly chart, we see a massive, multi-year consolidation pattern. We have successfully defended the $0.10 support level multiple times. This is our line in the sand. As long as we hold 10 cents, the structure remains bullish on a macro scale. We are seeing a phenomenon called a fallen wedge on the monthly time frame, which is typically a reversal pattern. The breakout point for this wedge is currently sitting around 0.13 to 0.14. Here is the roadmap for 2026. Target 1, the breakout, 0.16, 0.20. Once HBAR clears 0.13 with volume, the first major resistance is 0.16. This was a key level in 2024 and 2025. A clean break here confirms that the bear market trend is officially dead. Target 2, the psychological barrier, 0.50. If the ETF flows pick up and the RWA narrative catches fire, $0.50 is the next logical magnet. This isn't just a number, it represents a return to relevance. At 50 cents, retail FOMO kicks in. The YouTubers who ignored it start making videos. The crowd returns. Target 3, the blue sky, 1.0, 2.77. Can HBAR hit $1 in 2026? It requires a perfect storm. We need Bitcoin to remain stable or bullish. We need the Nvidia integration to go live with a major commercial partner. We need the total value locked, TVL, in DeFi protocols like Saucer Swap to double or triple. If these stars align, the previous all-time highs will look like speed bumps. Some models based on Metcalfe's law and the velocity of transactional revenue put the fair value of HBAR well over $2.0. However, we must be realistic. There are risks. The token release schedule, inflation, is still a factor, although it is slowing down. There is regulatory risk, although Hedera is arguably the most compliant network in existence. And there is the risk of opportunity cost, that other chains capture the hype faster. Conclusion: the moment of truth. We are standing at a crossroads. The crypto market is maturing. The days of buying a dog coin and hoping for a Lambo are fading. The next cycle will be defined by utility. It will be defined by which networks are actually used by the Fortune 500, by governments, and by the financial institutions that run the world. Hedera has spent 5 years building the boring stuff. They built the governance. They built the compliance. They built the relationships. They didn't take shortcuts. While other chains were breaking down or getting hacked, Hedera was running with 100% uptime. While other founders were getting arrested, Hedera's council was meeting with regulators. Now, in 2026, the pieces are on the board. The ETF is live. The tech is integrated with Nvidia. The banks are using the network. The coil is wound tighter than it has ever been. The price action is testing your patience. It is designed to shake you out. It is designed to make you bored so you sell your cheap HBAR to BlackRock and Archax. History rewards the patient. History rewards those who see the infrastructure before the skyscrapers are built. HBAR is not just a cryptocurrency. It is the trust layer of the future internet. And if you believe in that future, then 11 cents isn't a price. It's a gift. Stay strong. Stay informed. And as always, do your own research. We will see you on the next block.